Given the amount of information that I have provided on retirement annuities thus far, I figured this would be a great opportunity to get some feedback from family and friends. So the first thing they noted is that they were appreciative that I did not sugarcoat the information, that I actually provided you the annuities good or bad. But I felt like they had a tendency to have their blinders on, focused on the bad aspects of a retirement annuity. So they weren't able to look down the horizon at the long-term gains for a retirement annuity. They failed to see what the value was of a retirement annuity. By the end of this video, I will give you the facts so that you can make an informed decision about whether a retirement annuity is the right fit for your retirement portfolio. Hi, my name is Darlene Hartman. I'm a CPA and founder of D. Hartman Consulting, LLC. For the best retirement annuity advice, subscribe to my YouTube channel and hit the notification bell so that you can receive notices anytime I post a new video. This is a great opportunity for me to remind you what the annuity benefits are. So with respect to short term, an annuity can be a guaranteed income annuity. And if it's a longevity annuity, it's going to provide you guaranteed income for the rest of your life, money that you cannot outlive. Principal protection. So if you structure the contract as such, you will not lose your principal. You don't have to deal with those pesky market downturns, so no worries about losing sleep because you're going to continue to get those guaranteed income paychecks in the midst of a market downturns, and the amount is not going to be dependent on what's going on in the market. I briefly talked about legacy planning and long-term care needs, which I will address in future videos, and then also mentioned about the fact that if you're cooking your retirement annuity, in other words, deferring it for several years before you start receiving that guaranteed income paycheck, that deferral period, you don't pay taxes on that retirement annuity. I also mentioned how a longevity annuity is the combator of longevity risk and the defender against you not outliving your money. So thanks to a lot of improvements in the medical industry and even building materials for the homes and offices that you work in, there have been so many improvements that we are now living longer. But because we're living longer, we have to deal with those key retirement risks, which include market risk, inflation risk, deflation risk. We talked about sequence of returns risk and the fact that it does matter what kind of returns the market is generating at the time or right before or at the time you start your retirement. Withdrawal rate risk. Who knows what the right percentage is, especially right now? How much can you pull out? Does it have to be a constant number every year? Also talked about tax rate risk and the fact that we are looking at an increase in tax rates. It could be in the short term. Also long-term care risk. So if we're dealing with several of those risks in the same year, that can wreak a lot of havoc on your retirement portfolio. But back to my friends focusing in on the bad of a retirement annuity. So the one big thing that they're focusing in on is the fact that the interest rates are low. And they're right. They're historically low. But you can get much better returns in the market, right? But if you're approaching retirement, can you really afford those negative returns as either you're approaching retirement or right in retirement? And I want to say very clearly that there is no one out there who can predict the market, no matter what they tell you. But let's open up those blinders a little bit more. Let's look at the long term. It's called mortality credits. That's where the value is. So in the market, if you want a higher return, you typically have to take more risk. And a lot of times that more risk is associated with a higher fee. But let me tell you, you're not paying anything for those mortality credits, those invaluable mortality credits that's going to give you more guaranteed income in excess of the principal and interest that you invested in that retirement annuity. Leave me a comment in the section below and let me know if hearing about those mortality credits again helps you realize where the value is in a retirement annuity. Also, if you're enjoying this video, be sure to give me a thumbs up, subscribe to my YouTube channel, and hit the notification bell so that you can receive notices anytime I post a new video. I also talked about 2 different types of annuity-like payments that you may already be receiving or entitled to. So that was pensions, and I did mention a lot of those are being phased out, unfortunately, but there's still 19% of the U.S. population that's receiving those pension annuity-like payments. And I also talked about Social Security. So I will actually dedicate a future video for Social Security. So I don't want to get into too much detail right now, but there's a lot to talk about with respect to Social Security. But again, those are 2 annuity-like payments. I spent several videos talking about a single premium immediate annuity, a SPIA, and a deferred income annuity, a DIA. So the SPIA meets the income now needs, whereas in the DIA meets the income later needs. So I do feel like you cannot retire properly without a SPIA in your retirement portfolio. Now, timing and amount is going to depend on your unique circumstances. So remember, one size does not fit all. But it can also be used to fill an income gap. I want you to keep in mind that the longer you wait to start those guaranteed income paychecks from your SPIA, the more mortality credits you're going to receive. With respect to the DIA, that is more of a retirement income planning tool, which means the longer you cook it or defer it before you start receiving those guaranteed income paychecks, the more guaranteed income you're going to receive in retirement when you start receiving those payments. But also, mortality credits still play a factor in a DIA. So the longer you wait to start receiving those guaranteed income paychecks, the more mortality credits you're going to receive. So stay tuned, because my next video is going to talk about those sweet spots. When is it a good time to obtain a SPIA and a DIA? But I want you to keep in mind that, again, everybody's situation is different, and when you need that guaranteed income is going to be dependent on your unique circumstances. If you're wanting to ensure your income and therefore your retirement, a retirement annuity may be the right fit for your retirement portfolio. If you feel like you can't live without those invaluable mortality credits and the lifetime income guarantees that a retirement annuity can provide you, click the link below to apply to become my client. Also, if you enjoyed this video, be sure to give me a thumbs up. Share with your family and friends. Don't forget to subscribe to my YouTube channel and hit the notification bell so that you can receive notices anytime I post a new video. Thank you for watching. Let's get the conversation started on how you can live your best retirement while not outliving your money.